on, guys? Good morning. Welcome into the Everyday Growth Advisors pre-market live stream. Hope you are doing okay. Wanted to kind of come in here and give you guys a little bit of an update. Mondays and Wednesdays are now the days for the pre-market stream. So these are meant to be short, quick, action-packed, give you exactly what you need to succeed for the trading session. If you guys have missed this or you guys have been waiting for this to be back, it finally is. I hope that, you guys find these as useful as possible for your pre-market briefings. And I'll do Mondays and Wednesdays, get you guys everything that you need to know as usual. So let's get started. So this week, as you know, is first of all a huge week in terms of data, in terms of stuff that's happening. Today, not much going on. Tomorrow, you have JOLTS job openings. We'll be looking at this to see if the labor market continues to be tight or starts to loosen up a little bit. You have an ADP employment report on Wednesday. Then after that, you have the FOMC rate decision, which will happen at 2 p.m. as usual on Wednesday. And then on Thursday, you have initial jobless claims and non-farm payroll for specifics. And then you have ISM manufacturing. Next day, you have non-farm payroll unemployment rate. This week is a booby trap week, right? This is a bombs of many, many different things that can happen here. When a week like this pops up on your calendar, you should be thinking how you can trade the least possible and get away with it. If you absolutely do not see A+ grade setups with follow through and confirmation, you have no job taking those trades. Okay, I think we have all been doing this long enough to realize that when you see this much shit on a economic calendar, you need to give yourself a little slap and be like, yo, listen, this week, keep it chill, right? No flying off the handle with unnecessary risk, no doubling down on positions, no taking unnecessary position risk. You should be thinking about only A+ setups, okay? But here's a couple of updates. First of all, this is just going off the Discord research reports section. This is what you get when you are part of the team on Discord, right? Which we have obviously a 14-day free trial you can check out. This is your tactical sentiment heading into Monday morning. It looks like we tried to clear out another top here temporarily, but ultimately momentum is pushing to the downside temporarily. Remember, this doesn't give you any direction except for just up-down momentum. Your FCI ahead of the Fed meeting, now starting to pull back a little bit with the help of the data that has been coming out. Remember, this is an aggregate of many different things. Job market stuff is included in here. Bond market is included in here. Whole bunch of things. And in other news, hedge funds net shorts in the S&P 500 futures up 12% week over week to a 3-week high. Once again, when the S&P 500 is, when hedges and shorts start to pile up, we've only seen one thing happen with hedge funds. Who knows what happens when that goes on? Does anybody know? What happens when the hedge funds start, shorting and going aggressively long? They get burnt, okay? They get burnt. So I would definitely see the potential of S&P 500, kind of blasting up so that it can cause more volatility skew on one end. But the other end is also that this 61.8 level at which we spoke about on last week's stream, right? We spoke about this level being a very key level to start selling contracts, start selling calls anywhere in this zone, all the way up to 5,000-ish. And you can do calendar spreads for a month out, right? A month. I'm not telling you to immediately go short here. I was saying start selling calls on shares that you already own, right? I'm talking about your Microsofts, your Apple, your big tech companies that are doing nuts. If you own NVIDIA stock, like you can sell some calls up here because it's a very smart thing to do. You get juiced up premium, plus you get to exit your positions at a favorable price, taking your profits off the table, right? If your calls get exercised. if your calls don't get exercised, you get to keep the premium for free anyway, right? So I don't see a reason why in this area up here we can't start selling calls, which will be in the next week or so. We'll see where the Fed decision brings us on Wednesday, right? But that's what I'm eyeing at. That's what I've been telling from last week. This is my next project here, if you're really trying to act like a market maker, is to capture all this upside liquidity that's here, take it out, and then start selling your calls in this region so that you can set up for the next wave down, right? Because the wave down doesn't happen unless there's enough liquidity built. Now with the TLT fat tail bond market, we didn't quite get the bounce just yet. I drew this a while back, you guys remember it. But we'll see how the reserve situation with the Federal Reserve, how they're going to guide with the balance sheet and stuff during this FOMC session that will be on Wednesday. We did see some intense fight between bulls and bears on IWM here at the dual zone. I'm inclined to view this as a bullish outcome temporarily right now because, to be honest, IWM doesn't have a very interesting spot here to engineer liquidity. But if it builds a big enough base here in terms of support, we could potentially see the upside back at around 205 in the next month or so, right? This is a highly possible scenario, especially if the Fed decides to go goo gaga with its rate decision forecast, and then also at the same time unleashes the idea that they will start their bond buying program again, right? That's going to be a double whammy that will set off shockwaves across all small and mid cap stocks that are somewhat profitable, right? So I want to take advantage of that in tandem. Dollar index, as we spoke about last time, still kind of flirting with this level here. Break above, we'll see the 104 and then potential retest 104.60. If not, we continue to look for the retest of 102.807 here. This is a key level for the dollar index. Remember, this getting more expensive puts pressure on stocks. If this gets cheaper, this relieves pressure on stocks, right? VIX, nothing changed. Same shit, different day. Now let's get into some of the juicy charts. Okay, first one. XOM. This is a nice one. It's going for what we have coined on the EJ Discord as a under the ballsack scoop move. For those of you that don't know what we're talking about, we crack a lot of jokes on the Discord from time to time. We call this one the under the ballsack scoop move because it's literally a scoop below liquidity to grab all of this so that you can push way further up, right? We've seen these happen a couple of times already now in this past quarter. We've seen a lot of these capitulate, hit a liquidity barrier, liquidity zone where things get snagged out. You can see a little bit of that volume coming in over the past two sessions. And it looks like, if it can still break above 104.50, then, 105, 108 is not out of the question here. So if we get a pullback on XOM, I'd be happy to potentially take some on this. Looking for the upside bias, but happy to play the downside rejection as well, right? So the UF key level here is going to be around 104.30, 104, let's just call it 104 even, is a very key level. That's your key pivot point. Wells Fargo Chase, now you guys know I played this one last week. Very nice move from here. Once again, looks kind of like the under the ballsack, snoop move. Clear out, grab liquidity from the previous high here, which turned into a big support basin, firing off, and then on earnings sentiment and also just general bullishness on financials. For at least the top few financials, this one really bounced back strongly. So looking for a potential continuation, a break above 50.70. If it pulls back at 49.20, I want to see how this kind of plays out at 49.20. This is a key level that I want to watch because if we can bounce here once again, I'll be very inclined to play this up into 51.70 or 52 even for this upside retest. So if it rejects here heavily and I see, potential false breakout, come back in, that means they were trying to get some buy side liquidity here, then I would be inclined to take the opposing position and go short 49 and 47 strikes. in the next 1 month, let's just say. So we'll look at this as it plays out, and we'll go over it a couple of times as it starts to play out. I'll give you guys a lowdown of when I enter and exit here. Tesla is a really interesting chart right now, right? All these bouts of liquidity you can see got blasted through. Even this level here got blasted through. Now we're sitting at another key level of liquidity, which is around your 184 mark. Now, if we lose 184, 170 comes very quickly, and below that, the only other liquidity that can hold this up is at around 160, which is where we saw short-dated Tesla puts come in about 3 weeks ago. If it gets below 160, hallelujah, this is going to be a nasty drop all the way down into the 120s. And if it gets down to 120, I will be aggressively buying equity here. Aggressively buying equity, okay? Because the market would be too overdone on its sentiment if we get to 120. Too overdone. I'd be happy to take Tesla shares at 120 and be a buyer. I would load the freaking boat with whatever cash that I have to buy a bunch of shares there, and obviously not out of my risk tolerance, but I would go out of my way to buy, double down my Tesla position. So with this, I don't want to touch Tesla right now. Where it is, you can't predict if it's going to go close this stupid gap or it's going to fall further. Either way you look at this, the risk to reward ratio doesn't present an opportunity. Your risk profile doesn't provide an opportunity. Even if you use this as a key pivot point, it's impossible to guess if this is going to be the upside, because the gap fill is going to be having a lot of booby traps to deal with, sell side bombs that could occur anytime here. And then for the sell side, once you get past this point, your downside risk to reward ratio doesn't make sense at all. So I don't like this setup at all. Upside, downside, equal risk, equal reward, no bueno, right? We don't want a 1:1 opportunity at all. This is poor use of capital here. Uber also traded this one on the Discord with the team. So this one's interesting, obviously, flirting with the all-time high price discovery, and nice close on Friday. This morning opening just around there. The issue is the lack of momentum, the lack of push here with this, and then the market being at a lull here ahead of FOMC. I don't think I want to play this further higher, but let's see. If it really starts to rally, at least I'll have a alert or something that will warn me about this one. Next up is Shopify. This chart I'm bringing to your attention because it just looks a little funky. And tell me, what do you guys see here? Does anybody want to chime in here? Would be nice to have some conversation going about this. But what do you see about this chart that's a bit wonky, that could give you the idea that this might be tapped out on upside liquidity? What's the telling sign? Anybody? Nobody? Volume could be one thing. Low volume is not the main significant thing here. What I really do like on this chart specifically is the amount of wicks on this. This area here has a lot of topside wicks that at least show you that the buy side has been taken out here. The buy side has been taken out severely here. That buy side liquidity has been taken out. That means to say, when a sell comes, there will be very little buyers left to service the support for selling pressure. This is the one thing that I do like about this. The low volume, of course, plays another role, but just based on the price action, I feel Shopify might have a little bit of a pullback coming its way, because if it is unable to continue to break out into this 87, 86 level, then it's likely to get down and retest 74, this level here, for additional liquidity. That demand needs to step in here in order to push this higher. If not, then sellers take over the market and they dominate from this position, where everybody was looking for this level as a buying point. You know, some people plan trades differently. Let's say if they break this level, I'm gonna buy, right? But if you're on the sell side here, this becomes your area to sell, and so these wicks signify that the buy liquidity has been kind of manipulated here. So I'll be watching this for a potential short entry in the next couple of days. Let's see how long it takes to play out. Ideally, I would love a break of 79.50 or 79.20 around this area, and then a retest of that level would be the absolute best scenario. Amazon, pretty strong, has been continuing to break out. It looks like it actually wants to kind of break free here. I really wouldn't be surprised if Amazon breaks free and just rallies here, because the pressure has been building on this one for a while, and I feel like when it starts running, it's going to start running like crazy because of the amount of time it has been moving sideways. The other one that I wanted to put your attention to is Moderna. Nice little inverse head and shoulder pattern building here on the daily. With the potential for this break of the neckline coming up at 117.83. So I have some alerts set up here. Obviously, a break of 117.83 and then a retest of 117.83. This level here would see us move further higher. So that's one trade that I might potentially take. The other trade is if we reject right off the bat 117.83 or this area in general, right? Remember, this is not a one pinpoint point. This is more like a zone, right? So in this area in general is where I want to see the price action move in my favor. So I'm happy to play this long and short. I just wanted to give you guys the idea. It's quite a nice setup so far. Now, and obviously, some days we're not going to have setups. That's just the way it is. Airbnb, okay. Yes, Airbnb is nice. This is very nice. Yeah. This one I like. This I like. Okay, let's see. Well, if it plays out, when is earnings? Earnings coming up 13th February. Earnings is in 2 weeks. I have a feeling this might be best to play prior to earnings and then just dump it. You don't want to hold this into earnings in any way, but you have to be also careful that if you are playing this into earnings, don't get burnt by the premium. Because premium will start to rise pretty aggressively the whole of this week and next week as people start to bet more on the options, chain in general. So IV for a lot of contracts will start going up, and you want to get in there early if you are trying to get good prices. But essentially, this is also a nice little invert head and shoulder here that wants to break out, and the key level is where we are now, which is 150-ish, and then upside would be 160, 165, 175 here at the extension target for Fibonacci, and for the for the pullback retracement would be at 142.50. Then you'd have 136, and then you'd have 132 probably. This would be a difficult level to break here. So the upside scenario here is definitely looking better than the downside scenario. And yeah, that's all I have for you guys. Any other tickers that you guys want me to go through? Go ahead. You can put in there. Just a quick little thing here. Who's here right now? I want to know who's here. If you're here, can you type I'm here? I want to see who attends the live stream these days, SoFi had earnings. Okay, let's have a look at SoFi. I opened on McDonald's last week, but it got clapped. We'll exit on the wave up. Andrew Collier, NPCW, what's up? Jerome, nice. There's a whole bunch of you here. Santosh, what's up, man? Salim, Ivan, okay. D. Rosen, Harshita, hey, what's up, guys? Nice to hear from y'all. Seymour, Ian, okay, cool. It's nice to see that there are people actually listening. Okay, let's talk about SoFi. SoFi. Let's have a look at first this volume profile, because honestly, I want to see where this liquidity is going to hunt. Well, it does look like this liquidity hunt is now over for the stock in general. And interesting. So key level here was at 590. At 740 you have another big level here. And if it can clear above 950 to 960, then this one could really start taking off. There's a potential of it getting way higher, into this 1386 number. Now, I like this one, especially because it's in that, isn't it small cap? Yeah, it's within that small cap category. And this one has a lot of catalysts for specific things like student loan debt servicing. Now, I don't know if you guys know this, full disclosure, because I have to disclose that I do have a long position in SoFi, long term, here we go. So I added SoFi 4,000 shares at around $8.72. This was my filled order here, you can see that, 4,000 to open, $8.72. But prior to this, I believe I had bought some at a very cheap price. Let me see. No, maybe not here. These were all my past purchases. So whenever I add shares, I always post it on Discord so you guys can follow along. Okay, maybe I didn't buy them. I guess I bought 4,000 shares at 872 is where I have price right now. So they're kind of back to break even right now, but I bought them in September of last year because there was some news and things that changed my perspective about this business. I like SoFi as a business, just saying that, because they have a good business. I mean, it's a lending business. It's also servicing student debt, which is a big thing right now. Everyone's starting to go back into student debt. So I like the potential of this stock. But yeah, technical numbers wise, it's 870, 880, all the way to $9 where I want to see a break and continue firmly holding above 950 at least for us to see bids to the upside. Okay, any other questions? If not, I'm going to end the stream here today. I hope you guys had a good one. Thank you for stopping by, hearing my voice, and listening to what I have to say. FOMC is this week. Do not mess it up. Don't overtrade. Don't let your emotions get you. Be calm and let things play out the way they will. We regroup on Wednesday before FOMC. I'll give you guys my full rundown of what my initial thoughts are, and then we can take it from there the week after. I'm very, very happy if you gave suggestions on what kinds of things you would like me to cover. I'm gonna maybe start a conversation about that going forward with you guys. I would love to know what kind of content you guys want me to kind of focus on here, because on a daily basis I read a lot of reports, and coming on here to distill them and give you the run of the mills is something that I pride myself in doing. But I also want to know what you guys actually need to prepare you for pre-market, right? Is the stuff that we cover enough? Is the stuff that we cover too little? Is the stuff that we cover just right? Your feedback is important in ultimately making this a greater experience for yourself. So if you do have feedback, I would love it if you message me or told me, or if you leave a comment on the video, or if you tell me in the chat. But I would love to hear from you guys. It's been a while. Let's get this kicking into a different direction here, and yeah. So 10:25, we're 5 minutes away from the market open. I'm just gonna check here to see if we have any more data that came in this morning. Indeed, we do. The top open interest change for today was Amazon. Interesting. Wells Fargo as well. For the 160 puts on Amazon and 160 puts and and $50 calls on Wells Fargo. Okay, that makes sense. All right. Well, I will see you guys back on Wednesday. Nice to hear from y'all. Take care. Till then, peace out. See y'all.